Breaking news was released in the after hours on Tuesday that Elliott management had taken a stake in PayPal. In this video, I'll discuss this PayPal and Elliott news that was just released today, all under the lens of Pinterest, and how I believe that Elliott could be brokering a deal between PayPal and Pinterest, and that this is just one piece of a much larger puzzle. Let's dive into it. So this video is about finding patterns, and the fact is that Elliott management seems to be the glue that links Pinterest and PayPal. There's other links that connect these two businesses further, and we will dive into that in this video very briefly. But in order to keep speculation at bay, I want to first talk about the opportunity of Elliott and PayPal as a standalone business before I dive into the possibility of Pinterest being involved in this maneuver. So let's first discuss PayPal and Elliott as a standalone. We don't yet know the size of Elliott's position in PayPal, how big that stake is in the company, and we don't know their intentions with PayPal, why exactly they've taken on that position. This uncertainty is essentially what leads to our speculation. What we do know is that PayPal is an approximately $89 billion market cap company. They've lost over 60% of their value year to date. At their peak, they were about $362 billion in market cap, and today they're only $90 billion. PayPal has about $8 billion cash on hand and about $8 billion of long-term debt to go along with it. In February, PayPal stock fell as they lowered their 2022 profit outlook and they scrapped their growth strategy. They had a strategy to double their user count to go to 750 million users. They put this in place in 2021, and after seeing the weaker e-commerce landscape in 2022, this put pressure on the business as well as other macroeconomic factors. And all of this ultimately led to PayPal scrapping their growth projection. And after they did so, their stock fell something like 22% in one single trading day because of a couple of reasons, right? Number one, the uncertainty around the macro. Obviously, the business had a plan and now they're failing to execute on that plan. But also reaffirmed in many people's minds the association between PayPal and other pandemic stocks. So it essentially got grouped into this bucket with other pandemic plays. Now, the last point that I'll make on PayPal and Elliott as a standalone play is that Elliott has about $50 billion assets under management and has been known to previously make big deals. We talked about this briefly in the Pinterest video where Elliott took a stake in Pinterest. PayPal itself has also been in the crosshairs of activist investors in the past. The most notable case was in 2014, Carl Icahn took a stake in eBay and pushed for eBay to spin PayPal out as an individual company, which he believed would be more valued as a payments company separate from the eBay platform specifically. In 2015, PayPal was spun out as a result of this, so as a result of activist investor involvement. So let's now look at this news at face value and not connect Pinterest and the speculation. Why would Elliott take a stake in PayPal? Well, first and foremost, it could simply be a valuation play given the fact that the company has fallen from $362 billion down to $89 billion. It could also be an attempt to make internal changes in the leadership team as a result of the decision that they took in February to scrap their growth strategy. So the catalyst for Elliott could have been the fact that PayPal changed their plan, and Elliott might have some opinions on how it can turn the business around and create more value. All of these are legitimate possibilities of why Elliott could have taken the stake. However, the most interesting alternative is one that involves speculation. It's also the one that led me to making this video, which is that PayPal is one piece of a larger puzzle connecting Elliott and Pinterest together. So let's now jump into that as a potential alternative of these moving pieces. Now, the most direct connection between these three separate parties was in a video that I made a couple of weeks ago where Elliott had taken a 9% stake in Pinterest. I made a video discussing the details of that particular deal and where we could see Pinterest stock going from here. In that video, I highlighted a couple of key factors. Firstly, the fact that Elliott and Pinterest were still in talks when that news was released. They were in active discussions. And secondly, that we could see news coming out shortly because typically these situations move fairly quickly. I think the news between PayPal and Elliott is not a coincidence because of the timing of when this was released in accordance with when the Elliott and Pinterest news was released and the fact that PayPal and Pinterest both have their own shared history between the two companies, right? Back in October, there was rumors of a potential acquisition of PayPal buying Pinterest. This ended with PayPal shares falling almost 12% in 3 days. PayPal shareholders were not in support of this deal, and ultimately the PayPal board was forced to back away from the deal, releasing a statement saying that they were not pursuing an acquisition of Pinterest at this time. However, the thinking behind the initial acquisition was to combine the e-commerce benefits of PayPal with the social media and search engine aspects of Pinterest. In other words, PayPal had been consistently trying to transform itself from a strictly payments company into a digital commerce company, expanding beyond the online checkout option and becoming more of a service, helping users to find new items online that they might want to buy. Obviously, this has massive synergies with what Pinterest offers, right? Which is why this potential acquisition made sense. Now, fast forward to June, just last month, Pinterest ushered a new CEO, Bill Ready, who comes from an e-commerce background and is actively trying to move Pinterest now into an e-commerce perspective. So if we look at the potential arguments from both of these companies, it makes sense there's mutual synergies for a potential acquisition from both sides, with PayPal wanting to move more into a curation aspect and with Pinterest wanting to move more into an e-commerce aspect. These two businesses are synergistic with one another, or have at least the potential to be. One other thing I'll note on the new CEO, which I've highlighted in the previous Pinterest video, is he was previously the chief operating officer for, guess who? PayPal. For 6 years, he was the chief operating officer. Before he worked at Google, he worked at PayPal for 6 years. And before that, he was the CEO of Venmo, a company that PayPal acquired back in 2013. So Bill Ready, this particular person, has experience, first of all, selling a company to PayPal, working at PayPal as the chief operating officer, and now having that Pinterest connection as well. Taking all of this into account, let's move on to the third pillar, Elliott management. We know that Elliott has previously ushered big changes in Twitter, and before that in eBay, PayPal's parent company. And now Elliott finds himself, in my opinion, the third participant in this proverbial love triangle between these companies. Why? Because Elliott has a vested interest in making this deal happen. As of today's news, we have learned that they have a stake in both companies. So let's recap, right? We know that Elliott has previously made big changes in companies that they take a stake in. We know that Elliott has a stake in both companies. In other words, they have a vested interest in the mutual success of both of these businesses. We know that PayPal has previously wanted to buy Pinterest, and we know that both companies would benefit from an acquisition. They have mutual synergies as businesses. We know that Bill Ready, Pinterest new CEO, previously worked at PayPal and previously sold a company to PayPal. And finally, we know that Elliott has been in talks with both companies over the past several weeks, and a deal might be close to being complete. Of course, all of this should be taken with a grain of salt. This is all speculation, but I suspect personally that Elliott is playing matchmaker between these companies behind the scenes, that they're bringing both companies to the table to discuss at the very least the possibility of a merger or an acquisition. So all of this is well and good, but when is the next shoe going to drop, and what is that catalyst going to be? Personally, what I'm looking forward to is earnings for two reasons. Number one, because during times of negotiation and potential acquisitions, companies will push out their earnings due to pending news or release news around the same time so that they have an opportunity to communicate that news with the market during their earnings call. However, if the first scenario doesn't play out and the companies do not release some type of news in the next week or so, then I will be listening into the earnings calls for either of these companies, because I guarantee you that analysts are going to start poking around and connecting the dots just like I have in this video, and start asking questions around what is Elliott doing with Pinterest, with PayPal, and is there any talks ongoing for a leveraged buyout, for an acquisition, for a takeover, right? So earnings is going to be when we're going to get more definitive data. That's the next piece of news that will be released, in my opinion, either from Pinterest side, from Elliott's side, or from PayPal side, or some type of joint statement for the three. Now, the important dates to highlight here is that Pinterest reports earnings on Monday, PayPal reports earnings on Tuesday, meaning that we could be getting some news very, very shortly. Of course, as more news come out, as I discover more, I'll be making more videos to make sure to communicate that and share it with all of you. For right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.